Have you ever wondered how a 10-story office tower could transform into a thriving residential community right in the heart of Canada's largest tech park? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In a fascinating development in Ottawa's Kanata North Business Park, KRP Properties has embarked on a noteworthy project to convert a former office tower into a residential apartment building. According to RENX, this 10-story structure, located at 535 Leggett Drive, is being reimagined into 115 high-end apartments, complete with 4 multi-level penthouse suites. This initiative is particularly intriguing as it sits in the midst of Canada's largest tech research and development hub, which hosts over 200 tenants and employs approximately 12,000 people. The decision to convert the building, originally constructed around the year 2000, was a response to the office sector slowdown, as stated by KRP President Terry Young. The building's existing glass metal curtain wall construction made it a perfect candidate for this transformation. With the help of trusted partners like Montreal's NEUF Architects and Ottawa's RECL Contracting, KRP is poised to offer a unique living experience by integrating cutting-edge technology and leveraging its proximity to the Four Diamond Brook Street Hotel for high-end amenities. Young highlighted the strategic advantage of this conversion, emphasizing the incorporation of technology to attract tech-savvy residents. The apartments will be linked to the hotel's service-on-demand platform, offering residents conveniences such as on-demand meals, laundry services, and apartment cleaning. This service integration is expected to give KRP a competitive edge in the market. Sustainability is also a key focus for KRP, although the building won't pursue formal environmental certifications. The project aims to achieve the equivalent of LEED Gold or Platinum standards by reusing and repurposing building materials wherever possible. Impressively, 75 to 80% of materials removed during demolition will be diverted from landfills, including recycling glass as asphalt. The building will feature a state-of-the-art variable refrigerant flow HVAC system, enhancing energy efficiency and temperature control. Looking ahead, KRP's project is part of a broader vision to cultivate a vibrant residential community in Kanata North. The development aligns with plans from other major players like Main Plus Main and Nokia, who are also contributing to the area's growth with new housing units and mixed-use projects. Young envisions a Main Street evolution in the coming years, with more restaurants, bars, and retail spaces sprouting up to create a lively urban environment. Houston is experiencing a significant surge in apartment construction, with over 5,000 multifamily units proposed or underway in neighborhoods like Montrose, River Oaks, and the Heights. This development is part of a larger citywide effort to meet the rising demand driven by population and job growth. According to Yardi Matrix, Houston has over 29,000 multifamily housing units under construction as of January, with an additional 62,000 units in the planning stages. Within the Heights, River Oaks, and Montrose submarkets alone, over 5,000 units are under construction or proposed for 2025, as detailed in March submarket reports from MRI apartment data. The MRI reports indicate that 1,037 units have already opened in early 2025 across 3 different apartment complexes: Fairfield Sawyer Heights, Fairfield Waugh, and Hanover Buffalo Bayou. Furthermore, 3,132 units are proposed for the Heights, Washington Avenue, and Montrose submarkets, comprising 10 additional multifamily complexes in the coming years. Additionally, 931 units are proposed within Loop 610, specifically in Highland Village and Upper Kirby. The largest development will be Phases 2 and 3 of Hanover in Autry Park, which will include 700 units. Letitia Grant, a real estate professional with the Houston Association of Realtors, attributes the growing demand for multifamily housing to the city's recent population and job growth. Houston is projected to add 408,000 residents by 2029, according to a 2025 Houston Multifamily Market Report by Newmark. Additionally, the city recorded a monthly job gain of 15,200 in February, marking the highest non-farm payroll figure in Houston's history before September 2024. Chris Yuko, Managing Director of Development at Marquette Companies, notes that Houston's ability to generate jobs attracts people to the city. Yuko highlights the importance of understanding Houstonians' living preferences, such as their commuting habits and proximity to entertainment and dining options. He emphasizes that neighborhoods close to downtown, like the Heights, are particularly attractive due to their accessibility to offices, entertainment, and restaurants. Despite the population growth, the cost of rent in Houston has also increased. A 2025 housing study by the Kinder Institute for Urban Research noted a 9% rise in rent from 2022 to 2023, widening the affordability gap. However, Scott Evans, Director of Business Development at Hoare Construction, points out that living in Houston remains relatively affordable compared to other major cities. For instance, the average rent for a one-bedroom apartment in Houston is $1,362, significantly lower than cities like Los Angeles and New York City. Looking ahead, Evans anticipates the multifamily housing market will stabilize with the numerous apartment projects planned or under construction. The market is expected to thrive as newer generations, including millennials and Gen Z, continue to grow older and seek these types of living environments. However, Chris Yuko cautions that there may be a slowdown in new apartment projects due to concerns over tariffs and foreign affairs, which could make investors apprehensive. In a notable transaction that underscores the strength of the multifamily sector, Institutional Property Advisors, a division of Marcus and Millichap, announced the sale of Level at 16th, a 240-unit mid-rise multifamily asset located in the Biltmore neighborhood of Phoenix, Arizona. The property fetched a remarkable $61.5 million, equating to $256,250 per unit, as reported by Yield PRO. This sale highlights the ongoing demand for high-quality multifamily assets in prime locations, especially within affluent neighborhoods like Biltmore. The Level at 16th is strategically positioned within the Valley's premier financial district, the Camelback Corridor. According to Steve Gebbing, IPA Executive Managing Director, this area has seen limited new multifamily development over the past 25 years, with only 5 multifamily assets of 100 or more units being constructed. This scarcity adds to the property's appeal, ensuring a competitive edge in the market. The previous ownership, Saris Regis Multifamily Investment Management, maintained the property's allure through extensive capital improvements, enhancing apartment interiors, the clubhouse, leasing office, and fitness center. The property boasts a prime location on the corner of 16th Street and Campbell Avenue, providing easy access to major thoroughfares like Camelback Road and Arizona State Route 51. It is also conveniently close to popular destinations such as the Arizona Biltmore, the Phoenician, the Shops at Town and Country, and Scottsdale Fashion Square. Completed in 2010, Level at 16th spans 4 acres and features temperature-controlled interior corridors, a resort-inspired swimming pool and spa, a 2-story fitness center, and a parking garage. Apartments are equipped with stainless steel appliance packages and oversized walk-in closets, with an average unit size of 794 square feet. Marcus & Millichap, the parent company of Institutional Property Advisors, is a leading national brokerage firm specializing in commercial real estate investment sales, financing, research, and advisory services. As of December 31, 2023, the firm employed 1,783 investment sales and financing professionals across over 80 offices, facilitating investment brokerage and financing services for commercial real estate sellers and buyers. In 2023 alone, Marcus & Millichap closed 7,546 transactions, achieving a sales volume of approximately $43.6 billion. This robust performance underscores the firm's expertise in navigating the complexities of the real estate market and delivering value to its clients. Institutional Property Advisors, a prominent player in commercial real estate services across North America, leverages its real estate investment and capital markets expertise, industry-leading technology, and acclaimed research to provide tailored solutions for the acquisition, disposition, and financing of institutional properties and portfolios. This strategic approach ensures that clients receive comprehensive and effective support throughout their real estate transactions. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.